Good day. Welcome to the second video of the webinar series. From the first video that I uploaded, I received a few comments about super contribution, concessional contribution, and non-concessional contribution. What are they? How does everything works? I don't really want to go too much into nitty-gritty of it, so I thought I will do a presentation today just to present a few examples and a little bit of explanation about different types of contributions. My name is Felix, and I'm the principal of Prime Wealth Advice. I am based in South Australia, and I am a financial planner. Please keep in mind, this presentation today does not take into account your personal financial circumstances. So the intention of today's webinar, or any webinar series for that matters, is to provide you with some information so that you can understand or better understand about certain things. But again, this is not personal advice. It is a general only advice. I haven't taken consideration about your personal circumstances, your lifestyle, your goals, your objectives, what you're trying to achieve. So please be very careful. And if you would like to have a further discussions with me, make sure you contact me directly. Either use the QR code and book a 15-minute chat with me, or you can send me an email directly to my email address, which will be at the end of this presentation. So let us begin. Let me share you my screen so you'll be able to see what I will be discussing about. And here we go. Okay, right. So I hope everybody can see the presentation there. And what I will do, let me just, okay, so we are all set. So now today's conversation, as I previously mentioned, it is what is super contributions? It will be explained about super contribution, different types of contributions, and an example and brief explanation of each type of contributions. And then at the end of the slides, you'll see a QR code for you to make a booking so that we can have a 15-minute chat conversation. Or you can send me an email and we can have an understanding about what it is that you're trying to achieve, and maybe I'm the right person to help you, and then we can organize a face-to-face. All right. What is super contribution? Super contributions refers to payments made into a superannuation fund. This is designed to help Australians save for their retirement. For majority of Australians, if you are employed, your employer should be paying a percentage of your earnings into your super account. This is known as employer's superannuation guaranteed contributions. In the financial world, since me and other financial advisors or any product providers will be talking about SGC, or just SG for short. So if I happen to use those terminology, that is exactly what I mean, which is super contribution or super guaranteed contribution. For the current financial year, so 1st of July 2025, the super guaranteed contributions, or SGC, is 12% of employment income. So there are a few types of contributions. First one is concessional contributions, non-concessional contributions, and there are other types of contribution that can be recognized sort of non-concessional, but it doesn't really align with the rules set up for non-concessional contributions. So we will have a discussion about that. And hopefully I can interpret it better for you so that you can understand. So what is concessional contribution? It is basically contribution made to your superannuation fund before tax is deducted. Concessional contributions are taxed at the rate of 15% within super fund. It is capped at 30,000 in the current financial year. Non-concessional contributions are contributions made to your superannuation fund from your personal funds that have already been taxed at your marginal tax rate. Non-concessional contributions do not incur any additional tax upon entry to the fund. A non-concessional contribution is capped at $120,000 per financial year. For the current financial year, that is 2025-26 financial year. The other contributions which can be considered non-concessional in nature, but not restricted to the annual cap limit. Instead, they have their own separate rules to abide. I will give you a few examples of that so that you can better understand this type of contributions as well. Okay, so examples of concessional contribution. Super Guaranteed Contribution, SG or SGC. It is a compulsory contribution that employers must make to their eligible employees' super fund. So as of 1st July 2025, the minimum contribution rate is 12% of an employee's ordinary time earnings. Salary sacrifice is contributions where employees choose to give up or sacrifice part of before tax salary and add it directly into their super account. Doing so will help grow super balance while reducing taxable income. How it can work for you, I'm happy to have a proper discussions with you over the phone or perhaps face to face. And then the next one is personal deductible contributions. So what it means is that these are the contribution that is made with your after-tax income. So which means that the money is already in your bank account and you make a contributions into your super with that money. And you then submit a valid notice of intent to claim a deduction form, which create that contributions to become a concessional contribution that is taxed at 15% inside super, while you are claiming a tax deduction outside super. Examples of non-concessional contributions. Personal non-concessional contributions. So these are contributions made to super using after-tax money from your take-home pay or any other money you have in your bank account, savings, time deposit, whatever the case may be. It's basically a money that is already taxed. Spouse contributions. These are contributions made to a spouse superannuation fund from your after-tax income. If your spouse is a low-income earner, you may be eligible for a tax offset on the first $3,000 contributed. Government co-contribution. It is a scheme designed to assist individuals who make personal after-tax contributions to their superannuation. Should you meet the eligibility criteria, for every dollar contributed after tax, the government will match it with 50 cents up to a maximum of $500. So what it means is that if you're eligible, your income and everything, you're meeting the eligible criteria, then you put a maximum of $1,000 personal contribution inside super or into super, then the government will automatically contribute $500 into your super account. It is as simple as that. I think I just zoomed in too closely into my face. I'm not sure if anyone would like to see my face that close. So here we go. I'll just put it a little bit further away again. It's much better, I think. I don't like it when people see me really close. It just, like like people to be on your face. Anyway, examples of other contributions, as I mentioned before, that it is non-concessional in nature, but it does not really follow the rules for non-concessional contribution. Therefore, I just put it under a different category altogether, said other contributions. First example is downsizer contributions. These allow individuals aged 55 or over to contribute up to $300,000 per person. 600,000 if you're a member of a couple, right? So 300 for a husband, 300,000 for the wife, for instance, from the sale proceeds of their primary residence. So if you sell their home, regardless what amount that is, one spouse can contribute 300,000 into super, and another spouse can contribute 300,000 into their super. So it's as simple as that, and then whatever left, they can use it to purchase a home or downsize their home. But nowadays seems to be a bit harder because regardless whether you want to get a smaller property, the price of property tends to be quite high, which makes it quite difficult for anyone to downsize, so to speak. But that is a conversation for another day. Okay, so another type of contribution is called the small business CGT contributions. So what it means is that individual who's been in business for at least 15 years, and let's say they can claim on that small business 15-year CGT concessions, they can contribute into super with their proceeds from the sale of that business. Proceeds from the sale of business assets that qualify for CGT concession can be contributed to superannuation without counting towards the non-concessional contributions cap. So current CGT cap amount is 1.8 million. So you can put that smack bang into your super. However, you need to be aware that it still counts towards your transfer balance cap. So that is really about contributions today. It's not too convoluted, I hope. But if you would like to speak into more details about how we can put into strategy that can work for your personal circumstances, I'm happy to have a chat with you. Please feel free to contact me. That QR code is basically send you to a landing page where you can book in a time so that I can have a 15-minute conversation with you. I can find out about what you're trying to achieve and how we can potentially achieve that, and then we can set up a time to meet. Another is my email address, which is felix@pwadvice.com.au. It is my direct email, so I'm happy to chat with you over email as well if you are very busy individuals and conversation over the phone may not be suitable for you. Then yes, I'm happy to reply to your email if you have any questions. And please, by all means, check my website. It has some good newsletters. I think you can find some of these newsletters can be insightful. And make sure you subscribe. And I'll be happy to have a chat with you if you have any questions after this webinar. And ladies and gentlemen, that is summarize all my video for the second webinar series. So I look forward to create another video for the third one, and I look forward to present it to you again. Thank you very much and have a wonderful day. Take care.